Hey traders, the theme of tonight's premium video is pullbacks and what kind of pullbacks we're anticipating. Now I'm going to follow up with a conversation that we had in the free video, and that is, what am I looking to do on the daily time frame of August crude? And as we are crossing into the point of control for the month of June and heading down potentially towards the value area low for June and the 34 exponential moving average on the high, the top line of the wave, I'm looking at being a buyer in crude. Now, the zone really is a couple different levels. I mean, of course, we've got the point of control here, the 34 EMA value area high, low here. And then the trade is going to continue to be valid all the way down to the 34 period exponential moving average on the low. So this entire zone is valid. I would recommend QM contracts and or CL calls up in this area looking for a movement to the upside. And I would look for the actual CL futures contract within the wave, or even better, something closer to about, in this case, the Darvas level of 34.5, $34.50, which is, if you'll notice, the proximity from that Darvas level, this one right here, the proximity to the validity of the trade, or at least the validity of the trend, is very narrow. So your risk, if you wanted to define this as strictly a trend following trade, once we break the 34 EMA on the low, which is sitting at 33.95, so call it 33.90 to even 33.75, that's where the trend following is no longer valid. That is your point of validity. All right. Now, RBOB is not pulling back in quite the same way. In fact, we're seeing with the reopenings through the past few weeks at RBOB, we've seen drawdowns in RBOB. Now, it's not pulling back in quite the same way to me, not necessarily because of the technicals. It's not pulling back in the same way to me because we are seeing some draw on gas. So I would be a little cautious being too I would be a little cautious on being too aggressive on piling into crude and RBOB. Now, I hesitate because in some ways, I actually like the RBOB trade a little bit better. And this could also open up the UGA ETF. Now, I will not trade the USO ETF when it comes to crude any longer, but I will trade the UGA. So if you kind of hear my hesitation, partly I'm really right now, and not that we're in the conservative area of either setup, but I'm a little torn as to whether I would actually prefer to be long RBOB as opposed to crude. The truth of the matter is, both of them are double green, and you can be long either one. You know, what are some of the limitations to the upside right now? The fact that both of these are trading below the mean of their V-score, and the fact that both of these are trading below their 200 exponential prop dots. Okay, they're propulsion dots. But they're both buys to me. In fact, in some ways, I might actually like the RBOB a little bit more. All right, so then moving on to another market. Well, we're sticking with the theme of energies. A lot of folks have been asking me about natty gas. Now, we let go of the natty gas narrative once it became very choppy. And a lot of folks have been asking me, Rog, if you're going to trade natty gas again, isn't this turning into a really nice downtrend? Absolutely. We have the red grab candles, the requisite red grab candles, 5 in a row, with another 3 to 5 red grab candles with the green propulsion dots accompanying them. So for me, trends to begin, or even in this case, reorganize, will take 8 to 10 candles. This is a daily time frame, remember, and having 8 to 10 sessions to confirm a trend, in my mind, is not a lot to expect. I think that's a good amount of patience to exercise. But in the meanwhile, we have not come back to the 21 exponential prop dot, and we have not come back, bounced up to the 34 EMA wave either. So while this is a really nice downtrend, it's not one that I can do anything with. It's not one you'll hear me send an alert out, because none of the more conservative levels have been hit. Now, everybody wants to engage a market, but not everybody is ready to accept the amount of risk that an aggro entry sometimes demands. So if you're of a higher risk caliber trader, that's not good or bad, it just is, right? Either it's experience or it's capital in your account, whatever it is, or just natural wiring. If you get into a trade like Natty Gas to the downside from an aggro level, you as an experienced, aggressive level trader also know, heck, I've got to at least be aware that the market could rally up into the point of control, into the wave itself before it resumes the downtrend. So I sort of calibrate myself to accepting that extra amount of risk. Let me give you an example because I got a lot of emails today on Tesla. I know folks in both the options room and the futures room trade Tesla. And this was an interesting question to me because a lot of folks said, oh my gosh, Rog, look at this downtrend, or I'm sorry, look at this sell-off, this move lower in Tesla. And I got to be frank, this isn't a big move in Tesla, gang. How do I measure that? So for most traders who buy at highs, this is an awful move, right? What do we do in the futures room? We never buy at the highs, right? And we accept that if we're going to buy an aggro point of validity entry, like this one right here, that we're fully accepting that we could get down to here or even get down to here. We know this is an aggro entry, right? Okay. So with that being said, I know that I could buy the 21 EMA prop dot and even this value area low and 34 EMA on the high. Now I say this is not a big move, and I have this in the notes, by the way. Your average move in Tesla is about 50 points. Today was 47.75 points. The only reason and the only way someone would say this is a big move is if they were long from the highs. If you were waiting for a pullback, you're going to say, gosh, that was not big enough a move. That was actually a small move. That was actually not enough for me to engage Tesla to the long side based upon the sell-off. You would have wanted 50 to 75 points based upon the typical price movement range of this market. Here's your daily price movement range on Tesla. Take a look. So have a measuring stick. Otherwise, you're going to be one of those twitchy traders who, and we don't want to be a twitchy trader, do we? We're going to be one of those twitchy traders that say, oh gosh, that's a big move. Now, let's apply this same thing to crude because, again, I'm kind of reflecting some of the emails that I got. And this is exactly what I told those folks too. So this is a little bit of tough love. Take a look here. The range was 3.23 points. 3.23, right? Let's go back to the auto chartist and pull up crude and look at the daily price movement range. So here's your daily price movement range, 3.23. Is this above the average? Yes. Is this way above the average? I mean, your upper average is about 3 points. Okay? Your sort of middle of the ground is probably 2.25 points. All right? And your sort of extreme for the week would be nearly 4. So I would say this is a higher amount of movement. I would say it's more likely to be exhaustive. I would also say it's in line with what we would expect on a Wednesday in terms of expecting about 3.4 points. Again, we got today 3.23 points. So in many ways, this wasn't even pushing the high on a Wednesday in terms of daily price movement range. And I was kind of hoping we'd see something closer to 4 points. I would have loved to have seen something a little bit more exhaustive, closer to the value area low or the 34 EMA on the high. So if you have this kind of historical volatility measuring stick, you're never going to be fooled into, oh my gosh, look at this big move. Because if you don't have a measuring stick, that's exactly what a lot of traders will think. And they don't know how to brace themselves. So a lot of folks think this move in crude was big. It actually really wasn't. All right, do you see the parallel? I will do this in stocks, I will do this in futures, I will do this in Forex. Really important, gang, to be able to have these measuring sticks. Okay, so with that in mind, let's carry that logically to our next step. As we wind down the month, I've said a few times that we're probably going to have one of those days, something along the lines of June 11, where we get a sell-off, and that sell-off lands us near or inside the 21 EMA or the 34 EMA wave. We're not there yet. We've actually just hit the point of control for June. Yeah, it was a sell-off, but my gosh. Again, we hardly took back the gains of yesterday, but we're probably going to see a markets in turmoil special because of the sell-off, right? All we did was take back yesterday's gains. All right, so that's what I mean about the laughable amount of tolerance or lack of tolerance that traders have for the markets to go down. We want something far more emphasized. We want something to the 21 EMA prop dot, or we want something to the 34 EMA on the high, minimally. This is going to very much echo what I did back in here where we said, okay, this is a start going into the weekend. Let's wait for Monday. Bam, Yahtzee. That was our opportunity. I'd love to see a 1 to 3 day type move like that accompany the end of the quarter, end of the month, and we'll absolutely do what we did the prior Monday. So same thing on the S&P, which is my preference. I'd rather get long S&P and NAS. I mean, yes, I'm okay with a pullback like that on the Dow, but you'll see we're in that zone right now in the Dow. So you might say, well, Rog, how much lower do we want? I want you to notice that the Dow is a yellow wave reading, which means I don't even want to think about getting long the Dow until I get to the lower half of the wave, which is to say the zone between the 34 EMA on the close and the 34 EMA on the low. And quite frankly, we would rather focus on the value area low for the month and maybe this Darvas area. So this X marks a spot is really what would be an oversold Dow futures or DIA buy, not the same as what we're seeing in the S&P and the NAS. So be careful there. What about the Russell? What about the Russell futures? So again, what we want to remember, we have another yellow wave here. Now you can get these trade flags from Raghee.io, RAGHEE.io, no www. You can get these flags here. And again, what do I want to do? Lower half of the wave or closing in on that Darvas zone. And I'd rather have something down in here, much rather have something down in here that accompanies a completed pullback in the S&P and the NAS. In other words, if I'm going to buy the Dow, if I'm going to buy the Russell, I'd rather do it pretty much with similar timing to when I'm buying the S&P and the NASDAQ futures. So tomorrow when I'm with you all in the chat room, we'll talk a little bit more about the individual ETFs that we've been discussing more in terms of not just morning trades and so forth, but also the way in which we can start to get a little bit more granular on, well, if the NAS isn't looking good, what about the XLY, XLC? If the S&P isn't looking good, what's going on with healthcare and financials? What about the individual stocks? What are the relative outperformers that I can focus to the long side on? Okay, so again, I'm still working with my long only bias, and we'll talk more about that when I'm with you all in the chat room, 9:20 a.m. sharp tomorrow. All right, gang, I'll see you in the next update.